Hello? Hello? Okay. I hope you can hear me clearly. My name is Graham Osano, and today we're going to look at the 4 stages of the market that every beginner trader needs to understand. So we'll start off, we have it lined up here properly. We have the 4 stages of the markets that every beginner trader needs to understand. And then in this webinar, we're going to look at the 4 stages where we have the accumulation stage, and then we also have distribution stage, then we have advancing stage, and then there's declining stage like that. And then this the second point where we're going to learn how to use those stages for long-term trading. And then the last one where we are using advancing and declining stages for trading. Then before we start, we first need to look at what we checked previous last week on Wednesday, and that was engulfing candles. We actually looked at engulfing candles and how we can use them for long-term trading. So if you can remember, last week on Wednesday, the same time, we actually drew engulfing candles, and then previously, before then, there's a webinar where we said that there are only 3 rules you're looking at before we trade any engulfing. Then we built on what we said that time, and therefore we included trend. And then we also looked at this indicator, which is just a basic moving average. And if you can remember, we said that for you to trade engulf successfully, an engulfing must be in line with the trend. Like in this case, we are seeing this an uptrend, this upward move, then there's a retracement back, there's a move upward, then a retracement, a move up, a retracement, a move up, a retracement, then it continued up, then there's a retracement. So what we said last week was that if you see an engulfing candle like the first one, this red engulfing candle that closed below, then there's another engulfing candle that closed below, this shows that the price should continue downwards. So instead of selling it, we look for engulfing candles that are in line with the overall trend. Like we have this green one, then there's another green one, then we also have another green one, then there's an opposite engulfing that's pointing downwards instead of upwards in line with the trend. We also had this as an example where we had the downtrend. This moving, this is basically 52 moving average, simple moving average. There's this bearish engulfing candle, we went down, bearish engulfing candle, we went down, then another bearish engulfing candle, we went down, another bearish engulfing candle, we went down, bearish, then there's a bullish engulfing candle, and this is opposite the overall trend. So we said that we don't buy anything that's against the overall trend, and we don't sell anything that's against the overall trend. Like we have this engulfing pointing downwards, not exactly a good engulfing, but it points down. So that was in line with the overall downtrends. Such a thing is what we trade. There's also this example, which we saw this as an engulfing pointing downwards. We sold it, price went, then there's this engulfing pointing upwards, although it has a very long tail on top of it. So we don't buy this, but we'll sell this. We'll sell this, but will not trade this one. Then there's also this engulfing, though it's not a good engulfing exactly, but it's pointing upward. So we also said that as long as the price is still below this moving average, we expect the price to be continuing downwards. And we said that as long as the price is below this moving average, the trend is downwards, and that if there's any switch in places, like in this case, the moving average ended up below while the price came above it, this is now an uptrend. So we see we have this uptrend, this a retracement, then we have an uptrend, a retracement, an uptrend, a retracement, an uptrend, a retracement, like that. Then we can see engulfing candles pointing upwards. So as long as an engulfing candle is upwards, we said that we're supposed to be looking for a buy positions. Then if it is pointing downwards, we're supposed to be looking for sell positions. So that was the first rule. And then the next one was that an engulfing must appear on key levels. Like if this an engulfing candle, like this, there's an engulfing, there's an engulfing, there's an engulfing, there's an engulfing, all of them must either be closing on a key place or opening at a key place. Like in this case, this was opening here, closing around the same place, closing around the same place, and then we have this opening around the same place. Then we also have this one. This was an engulfing candle, went down, came back to the same place, we came down, we went up, came back to the same place. Then you find this engulfing candle, we have this, we also have this, all of them happening on the same place. The next example is this was a clear support. Actually, this was the third rule, which we said that an engulfing must be happening at a key place, and then there has to be at least two for us to trade. So if you look at this properly, we have this pin engulfing candle, price went up, came back to the same place, and then it engulfed upwards. Then the same trade engulfed upwards. This was another example which we looked at. Then we saw that there was a resistance broken, price came back to the same place, and then it engulfed again upwards. So if you can remember previous, there were three things we said which was most important. That the first one was that an engulfing candle must be in line with the overall trend. And then the next one, an engulfing candle must be within a key place, a key line. Then the third one was that an engulfing candle there must be several engulfing candle opening or closing within the same place. There must be several engulfing candles opening or closing within the same place. Opening or closing within the same place. Within the same place. So if you can remember, these are the main rules which is laid down. You say that before we actually trade in engulfing, these three must apply to that engulfing. It must be in line with the overall trend, it must be within the key place, then there has to be several engulfing candles opening or closing within the place. So that was that day. Today we have something a bit different from what we looked at. We want to look at the four main stages that every trader needs to understand in the market. And on this list we have the first one, which is accumulation stage, and this is also known as the consolidation to the lower side. So I've created some screenshot here, this screenshot which explains the same thing as this. So from this one, the first one is the accumulation stage, which we say that happens after price has been falling. It is also known as the consolidation period. Then exactly opposite accumulation stage is the distribution stage, which occurs after the price has been advancing. So advancing is also known as the consolidation period, but then it is opposite accumulation stage. Then we also have the advancing itself, which happens after break out of accumulation stage and is also known as the uptrend. Then on the far right we have the declining phase, which happens after a break below a distribution phase, also known as the downtrend, and is characterized by the highs and lower lows. So we want to check this on the real chart, and we'll start with the accumulation stage. So from the definition, we said that accumulation happens after price has been falling, and is also known as the consolidation stage. So on the real chart, the first thing you need to identify is that there was a trend, and exactly a downtrend. Then the price begins to consolidate after that downtrend. So it is that consolidation after downtrend that's now being referred to as the accumulation stage. Yes, there is this pair here. We have USD chef. So if you can remember, last week we said that there has to be a trend, and if you don't understand a trend, you need to add an indicator, which in this case we are going to add just a simple moving average, period 52. We add it, then this is a downtrend. The price went down, then there's a correction, it went down, then we have a correction, went down, then it begins to consolidate somehow. So it is this process of consolidation that we now refer to as the accumulation stage. We have this, that one. Price went down, came up, then went down, came up, then went down, then there's a move, then it begins to consolidate. So it is this move here, this consolidation, we need to mark it clear so that it's distinct from the others. This move, that is referred to as the consolidation or the accumulation stage, and it happens especially if the price has been downward for some time, like this. So anytime you see a downtrend, like in this case the price was down, then there's a correction, there's a downtrend, then there's a correction, downtrend, then it begins to consolidate somehow. It is this consolidation that we now refer to as, this is called accumulation stage. We need to mark it. The entire this place is called accumulation stage, and could mark the end of a downtrend, or it could mark the beginning of continuation of the downtrend. So assuming now this trend line, the one pointing upwards, and then the price breaks below it, we'll just be waiting for price to come back to the same place, like that. Then we sell it downwards, like this. Something like this will mean we are continuing downwards. And also on the other side, should the price break above an accumulation stage like that, then we wait for price to come back to the same place. In that case, then it should go up. Then if it tries coming back to the same place, then we'll buy it upwards, like that, like that. So these are the two cases. We have this place only. This place means that the price was accumulating, and then there's a break upwards. Price tried coming back to the same place, then it went up, then came back to the same place. These are potential places you're supposed to look for a buy. And the fact that the moving average below where price is only means that we are continuing upwards. So we've now explained, at least we have explained accumulation stage. We go to the next stage, which is the distribution stage. So from this screenshot, from this screenshot, we have the advancing stage being the second one. We need to explain that instead of distribution, need to go to the advancing stage first. So we actually moved from the accumulation stage, then we are going to the advancing stage, then we'll go to distribution stage before eventually we go to the declining stage. On the real chart, there's something you need to say. Let me put that down first, that the order should be the order after the declining, after the accumulation stage, we move to the advancing stage, advancing stage before we go to distribution stage. Distribution stage, then lastly we go to declining stage. So this is basically a circle. We are moving in a circle, like there's something like this. We have the first one should be on top, which we've looked at, accumulation stage. The very one on top should be at the accumulation stage. Then after accumulation stage, something like that. Then you go to advancing stage, which should be somewhere here, and then the next one should be distribution stage, and then the last one we have the declining stage. So declining should be there, declining stage, and then this was distribution stage, like that. And then we have the first one, which is advancing stage. So basically this is what we are looking at. It's basically just a circle. We are moving in a circle. At one point the price is moving downwards, like in this case the advancing stage basically means the price is moving upwards. Then we have the declining stage, the price is moving downwards. Then the distribution stage happens after an advancing stage. Then accumulation stage happens after declining stage. So far we've only looked at the first one, where the price was accumulating after downtrend. We had this downtrend, then the price accumulated down here, and we waited for price to break above it. Then on retracing we bought it, price went up, came back to the same place, and it was still another good buy. So we want to move to the next one, which is now the advancing stage. So if you can understand this properly, we actually said that an advancing stage is also known as an uptrend, and that I had some screenshot which I have for it. We have this one. This is not a very good one though. This one. We can see from 31st of August 2017 to September of the same month, the same year, price went up, came back down, went up, then went down, came up, then down, then it went up, then there's this consolidation. And so the entire move from the 31st August to 15th of September was actually the advancing stage. We were moving upwards. In every market there has to be a place where the price is moving upwards, and then it consolidates, then it proceeds downwards. So if we go to the next stage without looking at any other thing, like we go to the distribution stage, you'll notice that there is this, that the price went up, then it began to consolidate somehow, then it broke to the lower side. So it is this consolidation after an uptrend that we call the distribution phase or the distribution stage. We wrote it here that after the accumulation stage, which we already looked at, we now go to the advancing stage, which is basically an uptrend. Then we go to distribution stage, which is a consolidation after an uptrend. So you look at this chart at the moment, then you already should have seen this, that the price went up, came down, then went up, came down, then there's this move up, it retraced back up, then retraced down, and then it moved up, it spiked upwards, then it began to consolidate. So the act of consolidating after an uptrend is what we call distribution stage. Anytime you identify a trend upwards, then the price begins to consolidate. That consolidation is what is called distribution stage. And should the price break below that consolidation, then we are now venturing into the declining phase, the last one. So from this, what we wrote here, we have the advancing stage, accumulation stage, we've looked at it. Then we have the advancing stage, we've also looked at that. Then we have the distribution stage, which is consolidation after an uptrend. After the distribution stage, we now go to the last one, which is the declining stage, also known as the downtrend. We should put that this is also known as a downtrend, and that's what we need to look at now. Downtrend here, sorry, at this one. So you can see from 30th of October, that's yesterday, the price went down, GBPUSD, there was this spike to the lower side, then there was a massive correction, price went down, then there's a slight correction, we went down, then there's this minor correction, then the price went down, and then it began to consolidate somehow. So this consolidation is what we call the accumulation stage, or it's called just consolidation. The price was on a downtrend, then we came down, and then after hitting this low 1.26988, the price began to consolidate. So it is this consolidation that we call the accumulation stage. Should the price break above that stage, then we are now venturing into the advancing stage, and it means we are supposed to look for buy positions. So we can check that now on the real chart, GBPUSD. Sorry, we delete that, and then we delete this. So you can see on this chart we have this massive downtrend. Price went down, then there's a correction, then it went down like that, then there's this correction, price went down, then we have a minor correction, then we also have this downtrend, then there's a correction, then we have a downtrend, and then there's a correction. So anytime you notice that like in this case we have this higher high, then there's a lower high, then there's another lower high, and even more lower highs. So as long as the highs get even lower and lower as time goes by, then this a downtrend. It's also called the declining stage. We need to write this is the declining stage. Declining stage, also known as downtrend. So the characteristic of this one is very simple, that you look at the highs and the lows. So if you notice that this was a higher low, then the next one you see is even lower than the previous one, and also this high is lower than the previous highest high, then it means you're downwards. So you're supposed to be focusing on a sell. In this case, anytime you notice that there's a declining stage, you're supposed to be focusing on a sell and a sell and a sell. We need to mark it with a tick, that is this sell. We also have this as a sell, then we have this one as a sell, sorry, yes, marked already. Then you have this as a sell, and that's the end of it. The price went down, came up, then went down, retraced back upwards. You're supposed to be selling, went down, then retraced back upwards, we sold it, then went down, came back the same, some retraced some level here, level 1.2838, we sold it, then the price went down, and now it's correcting itself upwards. So this is just a correction and may end up coming up to somewhere here, support, broken, price may come back to the same place before continuing downwards. So This is with the declining stage. We want to check extensively on the advancing stage to see if we have any clean chart. That is this. So we want to clear this up first. Let's give it the best screenshot. That one. So from what we just said now, advancing stage is also known as the uptrend, and is marked by when the price keeps forming higher highs and higher lows. Like in this case, we have, if this is supposed to be the lowest place the price hit, this is the lowest place the price hit, and this is the highest place. You can see the first, this was a low, then there's a higher low, we went further up, then there's another higher low, there's another higher low, there's another one, there's another one, then there's another one here. Then on the higher side we have this higher high, price went down, came back up to the same place, down, then came back up to the same place, then down, then came back to the same place, down, came back to the same place, up, like that. So this, the entire move like this uptrend is called an advancing stage. Like this, price went down, then it came up, then it went down, then went up, then like that, it went up, like that. So you can see that there are several corrections within that uptrend, but that does not mean that the uptrend is not valid. The uptrend is still valid as long as the price keeps making higher lows. Like this, you can see this was a lower low, that we have this lower low, then price went up, came back and formed another lower low, higher low here. We also have this, then we also have this, and then we also have this, like that. Then we have these higher highs, this higher one, there's also this higher high, then you also have another higher high, then you also have this higher high. So this is called an advancing stage and can also be called an uptrend. Advancing stage, and can also be called an uptrend. An uptrend, like that. So we want to delete this. Let's move this indicator. You may not want to use it at the moment. So you can see we went up, price came down, went up, price came down, went up, came down, then up again, and each time the price comes to the lower side, it actually forms a higher low. It goes higher and then comes down, but then forms another higher low. So as long as this is happening, we are seeing higher lows and even higher highs, we are in an uptrend. We are supposed to look for buy positions upwards up to the ultimate end where it ends. And then the time when price begins now to form like this, you see a wide correction. The price corrects itself massively to the lower side. Then there's this move upwards, it comes down like this, or it goes up, then comes down like this, then proceeds upward. Anytime this begins to happen, then it means that uptrend is probably ending. Like in this case, we have seen this advancing stage, then it begins to consolidate after sometimes. This one marks the end of this uptrend and could in some cases mean that we are continuing downwards, especially if the price breaks above here. So should the price go above the highest places it hit 1.00480, then we'll wait for a retracement like this. Price should try coming down like that, then proceed upwards like that, and on the other side, should the price break below this line, we're supposed to be looking for a sell somewhere around here, then another sell here, and even these are still good sell places, this one. So we have the uptrend, advancing stage, then we have the distribution stage, and then we have the declining stage, and so far there's this lower one which may not necessarily be a good accumulation stage, but it's accumulation stage still. So we have the entire circle. There is this advance, the price goes up until this place, then it begins to distribute itself, and then there's a break to the lower side which marks the beginning of a declining stage, and then we have the accumulation stage at the far end of this downtrend. So there's something we said here which we need to put clear, that how to use the stages for long-term entry. The key to this is simple. The first thing you need to see, if you want to identify long-term trade, first identify the accumulation stages. Ensure you understand exactly where the price is accumulating. Identify accumulation stages. Then, because we mentioned before that accumulation after happens after downtrend, wait for a breakout above the accumulation phase to pick a buy position, or a break below the accumulation phase, to pick a sell position. So that's for the accumulation phase. We also have the distribution phase. So the same thing apply. We wait for a break second one. We wait for a break above the distribution phase. Should be distribution phase. So we've said that if you want to pick a long-term trade, the first thing you need to do is to identify this stage. First of all, know that we are either in accumulation stage or we are in a distribution phase. And as you've seen on this chart, the main chart, assuming I was here, the first thing I'll look at is simple. I'll first ensure that I understand that this is a distribution phase. We have this consolidation happening like this. I'll first of all mark this as a distribution phase. Then the moment price breaks below that phase, that distribution phase, I'll wait for price to come back to the same place. Then if I see indications such as this pin bar, this bearish pin bar, then it means I'm supposed to be selling it downwards. And by selling it, you sell it and remain short with it until the time you see an opposite consolidation. Like this case, you will be able to see this one. Let's look at the real chart now. We have that on the 15 minutes chart. Yes, we had this. You can remember we said that this was a downtrend, the price came down, then there's an uptrend, downtrend, then it begins to consolidate somewhere here. So you want to buy long term on this one, you first of all need to identify this is a consolidation phase. Then you wait for price to rise above it and you buy immediately after retracement to it. So far, if you bought it based on the same reasoning, you're supposed to be like around 53 pips ahead from where you entered. So this is called accumulation phase. Wait for price to break above it and then you buy it upwards. Or sometimes the price could break below it. Like instead of proceeding upwards, you're likely to see a case where the price goes down like that. Then try coming back to the same place like that, then you sell it long term like that. So that should pretty much explain what we wanted to say on this stage. We have the last one, which is why you should only trade advancing and declining stages. So personally, I prefer long-term trading. So during these phases, like the advancing stage, the declining stage, the price tends to move several pips my way, so it's better you wait for those places. That's basically the reasoning behind it. Like I would rather pick the all of this move like this than to try trading within this place, this accumulation phase. Also, I would rather wait and buy somewhere here and leave the trade running than to be waiting to buy or sell in between these two lines. So I think that should be enough for today. So far we've looked into what we wanted to there's this small recap of what we looked at last week. Then we looked at the 4 stages, which are just the uptrend, downtrend, and the consolidation phases. Then we looked at how to use the stages for long-term trading, where we've said that you have to identify that's the accumulation stage, and you also need to identify the distribution stage, then wait for a breakout of either of the two, then you enter trade in direction to where the price has broke out to. Then we've also stated why we prefer the 2 stages, the advancing and the declining stages for trading, because they're the long-term ones. So that's enough for today. We meet again next week the same time, and I'll announce the topic anytime from now. Thank you very much. See you again next time.